Welcome back to our channel. Today we're diving into the recent factors impacting the Australian dollar and what's behind its current downward trend against the US dollar. With news of potential tariffs from President-elect Donald Trump on Chinese goods, market pressure on the Aussie is ramping up. Let's look at what's happening and what traders need to know. Starting with the big picture, the Australian dollar, or AUD, has been losing ground for 3 consecutive sessions, driven largely by worries over Trump's proposed tariffs on Chinese imports. Since Australia is one of China's largest trade partners, any tariffs on Chinese goods could have a ripple effect on Australian exports, putting pressure on the Aussie dollar. Interestingly, there's some positive domestic news for the Australian economy. The Westpac Consumer Confidence Index rose by 5.3% in November, hitting 94.6 points, its highest in over 2 years. Westpac's senior economist noted that improving family finances and a stable interest rate outlook are boosting consumer optimism. On the other side, the US dollar is showing strength after the election results confirmed Donald Trump's victory. Analysts believe that if Trump implements his fiscal policies, we might see increased spending and investment, which could drive up inflation. The Federal Reserve may respond with a more restrictive monetary policy, strengthening the US dollar even further, which would challenge the AUD-USD pair. Market participants are keeping an eye on the US Consumer Price Index data release on Wednesday. The consensus expects a 2.6% year-over-year increase for the headline CPI, while core CPI is anticipated to rise by 3.3%. This data could provide additional clues on future US interest rates and monetary policy. Looking at the technical side, the AUD-USD pair is trading around 0.6570 below its 9-day exponential moving average. Short-term pressure remains on the downside, with the next key support level near 0.6512, which was a 3-month low reached earlier in November. A psychological support level sits at 0.6500, which could be tested if current trends persist. To the upside, immediate resistance is at the 9-day EMA around 0.6596, followed by the 14-day EMA at 0.6609. If the AUD-USD breaks above these EMAs, the next target could be its recent high of 0.6687, with an eye on the psychological resistance at 0.6700. Chinese economic data also weighs on the Aussie dollar. Recent CPI data from China came in lower than expected, and China's latest economic stimulus measures haven't met investor expectations. Australia, being heavily reliant on trade with China, could feel the effects of a slowing Chinese economy. As we move through the week, traders should monitor US CPI data, any developments around Trump's proposed tariffs, and central bank statements for additional insights. Thanks for tuning in. If you found this analysis helpful, please like, subscribe, and hit the bell icon for future updates.